But let's first get an overview on how things are standing at a market level. Dean Kim, head of global research product at William O'Neill, is with us now. Dean, good morning. Always a pleasure having you on the show. So we've kind of caught ourselves up in a bit of a range after the recent broader market correction, mid-cap, small-cap correction here in India. What do you make of the bigger indices over here? Do you see this 450, 500-point range breaking at all on the Nifty?
Yeah, I think it's important for the, I look at the sensex and, I think it's important for sensex to catch support here, right here at the 50-day moving average. Hopefully we'll see it bounce. But there are some support below that. For instance, there's price support at 1% below. There's also another price support 2% below. And then finally you have the 100-day moving average. But I think it's important to find support here because the distribution days count have been slightly elevated in India, and I think it would be positive for the index to find some support here. Otherwise, it's not all bad news. There's plenty of price support below it, but the 100-day moving average is 3% below. So I think it's important that we find some support at this level. Of course, the small caps sentiment coming from the small caps didn't help the situation. There is some resistance at the rising 100-day moving averages for the small caps, and support levels are price support at 3% below, and then you're looking at the 200-day moving average. Overall, I would say it's a pretty healthy consolidation. Besides small caps, the mid caps, large caps, they're acting quite well. We are seeing some ideas popping up, but the number of breakout hasn't been as much as previously. But nevertheless, the market still looks pretty constructive.
Okay, so Indian markets in a healthy consolidation phase, and support for us lies about 3% below the current levels. Dean, you said a couple of ideas are popping out. Could you elaborate?
There's some ideas around, there's always ideas around basic material, cap equipment, for instance, Jindal Steel, Ambuja Cements, Data Patterns, Zen Technologies. Those are all breaking out early stage base. I really like Thermax. The chart looks really great on Thermax. Powerful breakout with lots of volume. And then you have KEI and Sona Precision. And then I would say some, consumer cyclical names like Finolex or Electrosteel, Surabhi, Piston. There's a lot of good names still breaking out from early stage basis. So I would encourage everyone to take a look at them.
Okay, all right. Hi, Dean. Good morning and good to see you in. What about the banking stocks out here? Some of them are trading at attractive valuations. You had told us in the past that, you see that the PSU banks were moving quite well. So from the banking pack, what are you inclined to?
Yeah, I certainly, I do like the state-owned banks, but a lot of them are extended at the moment. But I would say on the private side, ICICI looks the best. It's still consolidating nicely, and it's actually in pivot, so it's ready to break out. So that one in particular looks pretty strong. In the past, some of the smaller consumer finance companies or stocks look pretty good, but they're either extended or in consolidation. So nothing there at the moment. One thing I continue to keep an eye on is the Indian yield curve. Still pretty flat. And so, when you see the yield curve start to steepen, that's when you start buying private sector banks. We're not quite there yet. I think that may come post-elections. So let's see what happens at that point.
Okay, that's an interesting observation that perhaps when the yield curve starts steepening, that's when you buy banks. We'll keep that in mind. Dean, let's talk about technology stocks here in India, because we had that fundamental news point from Accenture cutting guidance, etc. So that triggered some selling. Anything interesting you're noticing on the likes of Infosys, TCS, the bigger technology names? What lies ahead? Because that's the next event for this market, the IT earnings.
Right, right. So Tata Consultancy is in consolidation mode. Certainly, the sentiment from Accenture didn't help situation, but it is trading above the 200-day moving average, which is great to see. Infosys still needs some work. I think it is testing the 200-day moving average, so needs a lot of work on that stock. But some of the small caps, smaller cap names look pretty good. Like Dixon Technologies, it's not in in the same group as Tata or Infosys, but that one looks pretty strong. So there are pockets of smaller cap names that look pretty interesting. But the bigger caps, I think we're going to have to sort of wait until these stocks can sort of break out again at the pivot.
Dean, just zooming out of the Indian markets and just taking a look at the entire region, what's the big talking point when it comes to China now? Because in the last 24 hours, the headlines coming out of China have been a bit disappointing, whether it's the Apple sales or the disappointing earnings from BYD. Alibaba not going ahead with an IPO for its logistics arm. What are investors talking about when it comes to China and the region in general?
Yeah, I think China's dealing with lack of stimulus. Basically, when you look at the consumers in China, they're not spending as much. A lot of people are struggling because of lack of income. And so the government really needs to do something on the stimulus side. We haven't quite seen, the kind of stimulus that the market is expecting. And so that's why you have the China index it is making improvements, but it is running into resistance at the 200-day moving average. We'll see what happens here. It may roll over again, which is not great for the Chinese stock market. But unless the government comes up with a strong stimulus, I don't think we're going to see that pop that everyone's expecting. In fact, China and Thailand are the only two countries in Asia that's currently still in downtrend. Every other country in Asia is sort of in the uptrend. And so we're waiting for China to come up with some big stimulus news.
A problem about that from the global perspective and from India perspective is commodity prices get a leg up, and that brings back the inflation worries. Talking about commodity prices, the fear for India is this crude oil price move. We have seen it in the past. It moves closer to $90 and then it reverses. This time around as well, because of geopolitical tension and some supply cuts, it's close to around $87 per barrel and it's holding around there. Any view on commodities like crude?
Yeah, when I look at sweet crude prices, currently we're at 82. We think there's resistance at 84. So if it breaks above 84, then we may have a sort of negative reaction. But so far, it's sort of consolidating sideways, although slightly elevated. But there is support for oil at around 80, which is a 21-day moving average. So currently at 82 and resistance at 84. So it's kind of trading in, sort of a tight range going sideways. And for now, that is good news. But we don't want to see it sort of accelerating beyond 84.
Sure. Yeah, it does, offer a little bit of scare here and there. Brent going all the way to 86, 87. Let's see how that plays out. Dean, great having you today. And thank you for the perspective on all of the stock sectors and indices that we've spoken about. You have a good session ahead.